Okay, let us continue the topic payment of tax. In the last lecture of payment of tax, we have discussed two sections. Section 49, which deals with payment of tax, interest, fee, penalty, and any other sum. And section 50 deals with interest on delayed payment of tax. Because when you pay the tax late, you don't have to pay the tax only, you have to pay interest also. So let me share the screen with you of the topic which we have discussed in the last lecture. In the last lecture, we have discussed section 49. Complete discussion on section 49 was there in the last lecture. And then we have also discussed in the last lecture section 50. Interest of delayed payment. There are two interest rates. In case I made the payment of tax late, I have to pay interest also at the rate of 18%. In case whatever tax I paid that was not correct, why? Either because of my wrong ITC or because of wrong reduction, by way of wrong method of reducing my output tax, then I have to pay that difference of tax evasion, indirectly tax evasion, along with the interest at the rate of 24% per annum. We have discussed section 50 also in the last lecture. Now, next section, the topic is still continuing payment of tax. Now, the next relevant section is what? Transferring ITCs. Section 53 of CGST and section 18 of IGST. Now, let me discuss this concept with you. The heading is, ignore the section numbers, you learn the heading. Transfer of input tax credit from one account to another. I want to explain this concept with the help of an example. See this example on the board. I hope the board is visible now to you. Transfer of ITC. Now see this example, and then you will understand that what I want to tell you in this transfer of ITC. Suppose I have done some interstate sale. Suppose I have done some interstate sale. On interstate sale, which tax I will pay? IGST. Now, for example, I have done some interstate sale, and for example, on this interstate sale, my output IGST is 35,000. I have to pay tax of 35,000, but suppose I have some input also. I have some input tax credit. Now, do you remember the provisions that which ITCs can be used against which outputs? If you remember, input IGST has to be first used against output IGST. Then if some balance of input IGST remains, then that has to be used against output CGST or SGST in any preference, any order, any ratio. If you don't learn, then you have to revise your previous lecture concept. After exhausting my ITC of IGST completely, then my second stage is how I can use my ITC of central tax. ITC of central tax, CGST. Again, listen. On my interstate supply, I need to pay 35,000 IGST. Now I can reduce this 35,000 output tax if I have some ITCs available. So ITCs have a sequence to be followed. First, I have to wind up my ITC of IGST. When this balance is over, then I can think of adjusting my ITC of CGST. When this balance is over, I can think of adjusting my ITC of SGST and UTGST. While discussing the chapter input tax credit, I have discussed this concept in detail. So I'm not going to discuss it again here. In my example, for example, let us assume that I don't have this with me. Let me assume that I don't have input IGST. But suppose I have input CGST of 20,000 rupees. Suppose I have this input CGST of 20,000 rupees. Can I use this 20,000 input CGST while paying my output IGST? Answer is yes. If you learn the provisions, it's good. If you don't learn, then revise the topic input tax credit. I can use 20,000 input CGST while paying my output IGST. I can use it. So I will use it. Now, how much is the balance? Now, how much is the balance payable? Output IGST. Now, I am not supposed to pay 20,000 rupees because I have utilized my 20. I'm not supposed to pay 35,000 rupees because I have utilized my 20,000 rupees and balance I need to pay only of rupees 15,000. But can you think of those situations which have happened simultaneously here? Just think, suppose there is no ITC available in this example. Only assume that had there been no ITC, what would have been the situation? Had there been no ITC, what would have been the situation? Had there been, suppose there is no ITC. Had there been no ITC of central tax, how much tax you would have paid to the government? 35,000 rupees. And that tax would have been which tax? Output IGST. Had there been no ITC of CGST, I would have paid 35,000 IGST. But now what happened? It is a shifting from one account to another account. Had there been no ITC of CGST, I would have paid to the government 35,000 output IGST. But now because of 20,000 input CGST, do you know what loss has happened to the government? Indirectly, not a net loss, but loss of one account and gain of another account. I am depositing now only 15,000 in output IGST. I should have deposited 35,000. So what two things are happening? Again, listen, what two things are happening here? Situation one. What two things are happening here? This 20,000 ITC, which I am claiming now as my input, this is which tax? This is that tax which I have paid to the person from whom I have purchased the goods. This 20,000 tax I have paid to the person from whom I have purchased the goods. That person would have paid this 20,000 to the government of India. Now I am getting back this from the government of India indirectly. The tax which I have paid, 20,000 tax which I have paid in center's account. I have not paid directly to the center's account. I have paid this 20 to the person from whom I purchased. That person has deposited in central government's account 20,000 rupees. If I am claiming ITC, that means I am withdrawing it from the government indirectly. So what first situation is happening? The balance of central tax is going to be reduced by 20,000 rupees. Government has to remove the balance of central tax by 20,000. So first thing, there will be a reduction. There will be a reduction of 20,000 in which account? In CGST account. Just because of this adjustment, had there been no adjustment, I would have deposited in integrated tax account 35,000. But just because of central tax, I'm not going to deposit 35,000. I'm going to deposit only 15,000. That means there is the loss in which account? Integrated account. So, but second thing will simultaneously happen. First, there is a decrease in CGST, and because of this, there is a decrease in what? IGST, integrated account. So, what is the job of the government? Government has to transfer 20,000 from central tax account, which I am claiming as ITC, towards which account? Integrated tax account. Because just because of centers, my integrated tax balance falls. I hope the example is clear. By claiming ITC of central tax, I am reducing my depositing. I am reducing my deposit towards integrated tax. Just because of my center's ITC, I am removing or I am reducing the balance of integrated tax. So what is the job of the government? The government will transfer 20,000 from center's account, will deposit this 20,000 in integrated tax account. That's it. If still not clear, you please understand it with the help of this chart. Let me share this screen. See what is happening here. Same illustration, kindly see it. I am B in this illustration. Suppose I have ITC of central tax 20,000. Now I have done some interstate supply on which I have to pay 35,000 as integrated tax. Since adjustment of ITC is allowed, I will pay only 25,000. This is the example, same example, output tax 35 minus input tax 20, balance 15. But kindly see what is happening behind this transaction. Two things are happening simultaneously here. What two things? First, central tax of 20,000 which has already been deposited with the government by the person from whom I have purchased will be taken back by me from the government in the form of ITC. This is first thing. So government has to reduce the balance in center's account. Second, the integrated tax of 20 which government would have received from me had there been no ITC of center tax, now government will not receive it. So it will reduce the balance of the government of integrated tax account. So how it can be tallied? So section 53 says that government has to transfer 20,000 from center's tax account to integrated tax account. That's it. That's it. This is what I wanted to discuss. Transfer of input tax credit from one account to another. In my example, what is happening? Transfer of ITC of center tax towards output integrated tax. That's it. So when you utilize ITC of center tax to pay output integrated tax, how the transfer will happen? Government will transfer 20,000 from central tax account. Any amount which is utilized as ITC, government has to reduce that account balance and it will be transferred to that account which is your output tax. So in my case, balance of 20,000 will be reduced from center's account and it will be transferred to the integrated tax account. This is my first point. Any doubt you can ask me through chat window. Hurry up, kindly reply. I'm waiting for your reply. If you have any doubt, you can ask me. So whenever you utilize any ITC, the rule says, section says that transfer that much of balance from that tax towards your output tax. So reduce the balance of your input tax account and increase the balance of your output tax account. So the question is, final state become the receiver of total tax? Of course, because GST is which concept? GST is the concept which is based on what? That final consuming state will get the revenue. So wherever the goods or services are consumed, that state will get the revenue. Kindly reply fast if you have any problem in this illustration. Shall I proceed now? Okay, Saurabh has a doubt. Let me open that screen of yours. Okay, there is no doubt. Okay, let me proceed. It is what? It is utilization of ITC of central tax towards output integrated. Same is the case with other ITCs. Utilization of ITC of integrated towards output center. Now, can you tell me in this case how the transfer will happen? Government has to transfer from integrated tax account towards output central tax account. Is it clear? If you utilize ITC of integrated tax towards payment of output center tax, then government has to reduce the balance of integrated tax and government has to increase the balance of central tax. Same is the case of ITC integrated towards union, ITC integrated towards state. So all the utilizations of ITCs I have discussed. That's it. The chapter is over now. No need to see this section. I've discussed more than three sections. Section 49 of CGST, section 50 of CGST, section 53 of CGST, and section 18 of IGST. When I was discussing the provision transfer of ITC from one account to another, this was written in section 53, utilizing ITC of center, and all other three utilizations are written in IGST section 18. That's it. So I have not written this section name specifically, otherwise the concept is same. Now chapter payment of tax is over. If you have any problem, you can ask me. I'm waiting for your reply. If you have any problem, you ask. Okay. Then tomorrow we will start a new chapter, job work. So let us wind this lecture today. I will upload both these lectures on YouTube also, because those students who don't have a high internet, or because of some reason they cannot attend live lecture, they can at least see the lectures on YouTube. So tomorrow we will start a new topic, job work. Thanks and all the best.